Hey, good afternoon. This is Ken Jolliffe with BIS Commodities here in Cedar Rapids, Iowa. Looking over the ag review here for the week ending September 19th. We're going to start out with the grain markets here today. Corn market for the week closed down 7 cents. Soybean market for the week down 28 cents. And the wheat market for the week closed down 28 cents. Looking at each one of these commodities here this afternoon, corn market spent most of the week virtually unchanged in a very quiet, narrow, low volume trading range until today. Today we posted new contract lows for this particular move. It felt like that we walked in here and the market wanted to give the impression that harvest was just around the corner, or is getting started in some areas of the Corn Belt. We all know that it's slowly working into the central regions of the belt here right now. Yields continue to be the storyline. The early yields continue to be very strong. It seems that a 200 bushel per acre yield is a major disappointment at this particular time. A lot of 220, 240, 260 being talked about. And you're talking in regions of southern Illinois, southern Indiana, central southern Missouri being the same thing. So very strong yields being reported as we slowly see this thing move north. A lot of high moisture corn out there yet. The growing season has been extended longer than what we've seen in the past couple of years. Some of the corn that's now being harvested still containing moisture levels of 25, 27, 29%. So it's going to be a slow process here for a while as we move northward. You are seeing some of this start to evolve into the cash markets, as you see the nearby premium in bases quickly eroding away as much as 25-30 cents. So that has disappeared this week as we've seen supplies pick up here in a little bit. So weather looks to help out dry down this corn here over the weekend into the first of next week. So thus we could see some additional pressure maybe on the corn. Soybeans much the same, other than we dodged a bullet last weekend across much of the grain belt with the frost scare that was in the marketplace late Friday. Frost seemed to be very scattered, very light, just kind of cinching some areas. And now with the weather forecasts of being more normal to above normal temps, I think it's kind of going to become full bore ahead in the soybean harvest here. Probably starting more so 7 to 10 days down the road here in the central regions. The southern regions where we have seen some harvest activity, again, yields are very strong. A lot of 60 to 80 to 90 bushel yields. We'll see how that transpires as we continue to work northward. Cash markets very similar to the corn situation here in Cedar Rapids. Yesterday, cash beans into the processor was worth $1.75 over. This afternoon is 50 cents over. So we're seeing that we are slowly starting to pick up some new crop supplies coming into the processing plants. Wheat market, and this is one I think we want to pay close attention to, as it continues to also make new contract lows here at this particular time. And as we look at the wheat market, I think we have to look overseas and understand what's going on here with supplies. We continue to see huge supplies in the European area. We also talk about huge supplies coming in the Black Sea area, particularly Ukraine. And it's somewhat amazing as we go back a few months to the conflict over there, and people worried about not getting the acres planted in that particular region. And here we are talking about supplies being well above a year ago, supplies being quite a bit cheaper in the export market than what they are here coming out of our marketplace. So a lot of competition there within the wheat, and the wheat market continues to make new lows like this. It appears that will continue to maybe be a culprit to drag down our corn and bean markets as we go through harvest also. One other thing to look at here quickly as we talk about the commodities is the strength in the U.S. dollar. We are seeing this continuing being a factor here, especially this week. We had a couple days this week where the U.S. dollar was up against every major currency in the world. And this is going to continue to be a play against the commodities. Now, go back just a few years ago when we were seeing you just had to buy commodities theme by the funds based off the weak dollar. Now we've got the complete opposite going on here with the strength in the dollar and the commodity funds that are participating in any ag sector selling that particular commodity here for right now. Transportation issues, storage issues, still a topic to be discussed as we get into harvest. I'm sure we're going to see some supply storage issues if this crop comes along as big as it's being currently advertised here right now. Transportation issues, costs are going to be extremely high. A lot of talk nationally of the railroad situation. If it's going to be a repeat of last year to where we struggled to get all of our ag commodities moved on a timely basis, particularly starting up in the Dakotas and working down this way as the demand for power and crew continues to be much more towards moving oil trains than it is agricultural products. So that will be a storyline as we get ourselves probably into the latter part of this harvest this year. So kind of summarizing the grain situation here right now, as I said, feels much like harvest is starting to ramp up in most of the areas as the prices today made contract lows in all three of the commodities that we are looking at: corn, beans, and wheat. The ag sector here today, the hog market, as somebody that has seen the pork belly trade of years ago, the hog market almost looks like the old pork belly trade of that particular time frame, to where we had 4 or 5 guys in that particular bit. Volatility was just utterly amazing. You saw the hog market yesterday trade down as much as limit move down to $3. You saw the cutout come out yesterday afternoon being $4 higher. Thus, you had a $4 trading range in D's hogs yesterday. You had about a $6 range in October hogs from yesterday to today. In other words, a limit down move to a limit up move. The cash markets have been holding very steady. I think the volatility in the futures may be indicating that it's going to be tough to get this thing a lot higher, but it just seems that the funds have been there, and we're going to see extreme volatility in that particular market. Cattle market, we had a cattle on feed report this afternoon. On feed at 99, guesses were 98.8. Marketing was at 90. It came out at 91.5 and placed at 97 versus 95.5. A typical cattle on feed report, why we bring this thing out at 2 o'clock on a Friday afternoon with all these other ag reports during the trading session, pretty much could be forgotten about once again by Monday morning. But if you take a look at the numbers, you could construe them as slightly bearish, particularly on the placements. So it's kind of a summary of the activity here during this particular week. Have a safe weekend, and I'm sure we'll see harvest activity ramp up next week.